pharmaceuticals now. Sun Pharma is the top nifty loser. It's under pressure after reporting an operationally in-line quarter. Net profit was subdued while margins came in healthy. I did catch up with Sun Pharma's group CFO, CS Muralidharan, and began by asking him how the company is planning to use that additional $100 million that they are planning to spend in FY26.
So the $100 million spend is related to the two new specialty product, Lexelvia and Loxid launch in the United States. And this spend will be covering all the launch-related expenses in the current fiscal.
Okay. You're also increasing R&D spend to 6 to 8% of sales. Where will this incremental spend go?
So we have shared our product pipeline in our press release yesterday. So the clinical trials in respect of those pipeline products are undergoing, and the expenses are intended towards that, apart from the normal R&D spend on the generic portfolio.
Okay. What would this do to your margins in FY26, considering the additional $100 million in terms of spend, as well as the R&D expenditure increasing to 6 to 8% of sales?
See, we are not giving any specific guidance on margins. However, it's important to note that our key growth drivers like global specialty business, India, emerging markets, and other business are well positioned to grow. We continue to focus on cost and operational efficiencies, remain competitive, and thereby aim to improve profitability. Having said that, the $100 million expenses related to the launch of two new specialty products needs to be factored in overall modeling.
All right. Well, let's talk about the top-line revenue guidance then, where you have indicated it's high single-digit top-line growth, mid to high single-digit top-line growth. The company has mentioned global uncertainty as a reason for that. If you could elaborate.
So in our earnings call, we did share our revenue guidance for FY26, which is mid to high single-digit. This revenue guidance is after considering various regulatory uncertainties prevailing in the United States and other places, and that's the reason why we are given a wide range of guidance.
Okay, so it's trying to factor in what could happen with the tariffs?
See, we are not able at this point of time to understand the real notification as and when it comes. We'll be able to read the fine print and interpret it. As of now, there is no clarity in terms of the regulations, neither for tariff nor for other aspects in US. As a result, we are not able to measure the same.
Okay, so this is not product related. This is more environment related. So there's a chance possibly of increasing the guidance as the year goes on, because traditionally you've always guided for, high single digit to low double digit revenue growth.
I think we need to wait for getting more clarity on some of these specific matters for us to understand better.
Okay. Your specialty sales, they grew around 8.6% year on year in Q4 versus estimates of maybe a double-digit growth. Were there any slower sales this quarter when it came to your specialty portfolio? Was it in line with what the company was expecting?
So the global specialty sales for the Q4 was about $295 million, up by about 8.6%. However, if you see the FY25, the global specialty revenues were $1.2 billion. Up 17.1% year on year. And more important factor to reckon is that the share of specialty sales to consolidated revenues on the full year basis has moved to 19.7% current fiscal as against 18% the previous year. And I think it's important also to note that we have been consistently increasing the share of specialty revenues to the consolidated revenues every year.
Okay, but are we expecting this kind of growth going forward in FY26, single-digit growth in specialty sales per quarter?
I did mention that all our key products in specialty are well positioned to grow, and we expect to maintain the growth trajectory for the specialty portfolio.
$1.2 billion is your exit rate for FY25. What can we expect for FY26?
See, this has been factored in overall revenue guidance, what we are given.
Okay, all right. What is your sense on Ilumya's run rate, given that there could be incremental competition coming into the space?
We stated in the earnings call that in respect of any biosimilars on the Ilumya, at this point of time, we do not expect any headwinds.
All right. MM2 is basically one of the drugs under development. You're looking for a partner for it. Could you give us more details?
See, we did a strategic reassessment of our pipeline, and based on that, we have come to the conclusion that we will look for a partner with whom we can develop and launch.
All right. By when?
So there's no timelines as such. First, we need to look for the right strategic partner who will be able to do work along with this and bring this product to the market.
All right. GL0034, which is basically what you're looking at in the diabetes space, is that an equivalent or a competitor to, say, the Mounjaros and the Wegovy's of the world?
So, in terms of, we feel that the product is attractive and competitive profile compared to the type 2 diabetes products that are in the market.
Okay, so that would be a GLP-1 inhibitor.
Yes.
All right. And it would be on the innovation side.
Yes, please.
All right. How are you playing the semaglutide opportunity where it goes off patent in multiple countries next year?
So we have stated that we are well positioned to launch the product both in India and emerging markets.
All right. And what kind of competition do you expect in this space?
See, the product is quite attractive. There are other companies who also given their commentary in terms of their position to launch. So at this point of time, we are focusing our preparation for the launch and to be successful on this product.
Talking about acquisitions, you have around $3 billion of cash on your books. Any utilization plans, any M&A on the horizon?
We continue to look at strengthening our specialty portfolio through the in-licensing opportunities. What we have seen in the last 3 years, you have seen we have acquired Concert Pharmaceutical through whom the Lextel-V came in. Recently, we are undertaking the transaction of Checkpoint through an Unloxit is coming. As a result of which, we'll continue to look at portfolio in the area of onco, derm and ophthalm to further add to our portfolio.
The size?
We have got war chest in the balance sheet subject to the product being attractive and we will be able to do well in the market. I don't think size is a constraint at this point of time.
What is the risk of launching Lextel-V in Q2? You do have a litigation. It will be an at-risk launch.
It will be at-risk launch, which I've shared yesterday.
Okay. Any contingency plan for it?
Not required at this point of time. Since we have a favorable judgment, we are preparing for launch.
What is your expectation when it comes to tariffs?
Too early to comment. I said in the beginning of the call, we yet to see the fine print. As and when it is finalized by the US government, then we need to interpret the regulations and then decide.
Are you considering onshore manufacturing?
Not at this point of time.
Okay. All right. So it's not on the cards. Just a quick update before we let you go. Update on Halol and the Dadra and Mohali site.
We have mentioned that we have requested the agency for an audit in Halol. As regards Mohali and Dadra is concerned, we are still working on the remediation processes. And as soon as we complete, we will inform the agency.
All right, those are some comments coming in from the management of Sun Pharma, the stock among the top nifty losers in today's trading session. With that, we'll slip into a short break, but on the other side, a lot more pharma talk lined up for you. The management of Mankind Pharma joins in to discuss the quarter gone by and the year coming ahead.